My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Kramer. Welcome to Mad Money. Welcome to Kramerica. I'll be one of my friends. I just want to try to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. We're not winning the war against the pandemic. And when we're losing, we buy the Cramer Covid-19 Index. Oh, I wish there were more to it than that. But when the virus seems unstoppable, you go back to the well and buy the stocks of the companies that do well when the illness rages, regardless of valuation. That's how the Dow gained 236 points today, S&P advanced 0.72%, and the Nasdaq, filled with pandemic winners, surged 1.47%. This rally was extra infuriating to anyone who thinks the market should reflect or be linked to Washington's inability to pass another stimulus bill now that the extra unemployment benefits, $600 per week, have expired. They're baffled that stocks seem to celebrate the new hotspots, the rising case counts in so many states. Oh, California over 500,000, the forced closures of flagging businesses. So let me give you Cramer's guide to the perplexed. Because when you go to the tape and look at what's winning, it's actually very straightforward. There's nothing counterintuitive about this move. It's not crazy. It's not illogical. In fact, it makes perfect sense. Let's do this. Let's consider the 15 best performers of the Cramer Covid-19 Index as of midday today. First, there's Fastly. Oh, that's a big day trader favorite. This is a platform that provides stability and support to tens of thousands of websites that handle everything from news to e-commerce. These guys work with Shopify, New York Times, Slack, Microsoft's GitHub, competitor of Atlassian that we'll hear from later in the show, as well as Pinterest, which is also on tonight's show. Fastly thrives when everyone's stuck at home. Well, guess what? We're totally stuck at home. We're totally relying on the internet. Second, Chegg, the on-demand interconnected learning platform that reported spectacular numbers tonight and raised guidance through the roof, plus 45% for this year. 45! With so many colleges moving courses online, of course Chegg stock is soaring. This company, it's a dream come true for stay-at-home students and for stock market junkies. Third is Chewy, the online pet food store. If you have pets and you're trying to quarantine, you use Chewy. Again, this is another company that would have been doing fine, but is now on fire thanks to COVID. It's a pandemic playground. Fourth is Peloton. Oh, there's nothing like a pandemic to turn an exercise cycle into an ecosystem. When the gym is closed, you stop using your Peloton bike as a clothes rack and prepare to sweat it off. Sweat off all that Truly or White Claw with Allie Love, who will crush you. Her digital coaching is integral to the flywheel that is Peloton. Apologies to Flywheel, the spinning brick-and-mortar competitor. Fifth, regardless of who comes up with a vaccine, we're going to need billions of vials. And that means we need Emergent Biosolutions. They're the contract manufacturer for a number of drug companies working on vaccines, including J&J. They have the capacity, the capability, and the skill set to help. The worse the outbreak gets, well, the higher the stock goes. Is there really any mystery to that? Six, diabetes is a huge risk factor for COVID. It's much more lethal for diabetics. So no wonder Livongo Health, that's a digital life coach that specializes in helping diabetics manage their condition, has become a total juggernaut. It doesn't get more pertinent than that. Seventh, when you hear that the disease is raging, you know everything tied up in the work-from-home complex is headed higher. How do you stay in touch when you can't go to the office? Zoom video. Again, this one's so obvious that it's already become a verb. I mean, believe me, Zoom doesn't run like this when people are confident about the future. Number 8, Etsy, the online marketplace, Brooklyn's own for all sorts of handcrafted stuff, including masks. More importantly, Etsy lets you build a whole business from your kitchen table or your garage. We love it at our restaurants. We bought beautiful aprons for our waiters and waitresses and beer spouts for our bar. Imagine how well we'll do when we're actually able to serve customers in the restaurants. Ninth, what's a hot 100 list without Shopify? Yeah, Shopify, which helps hundreds of thousands of small businesses go digital. It's also become a growth engine for large consumer product companies. People don't realize that. Now at $123 billion, it's the largest business in Canada. It used to be a fraction of that. Okay, 10th is the Trade Desk, which helps companies manage data-driven digital advertising campaigns, especially against streaming content. I think this may be a play on the possibility that Microsoft gets TikTok and makes it much more advertiser-friendly. The Trade Desk is a competitor to Google, so it's a natural fit for anyone who competes with Google. 11th, you need a web presence, right? I mean, come on, this year of the internet, you need one. Probably don't have one. Well, if you do, you need to go to Wix.com, like we did when we started a restaurant. Wasn't hard. My wife helped design the longshoreman's presence with Wix assistance, of course, like everybody else. Again, this is another company that's essentially for small businesses that are trying to survive the stay-at-home economy. Notice I didn't say pathetic small businesses. Small businesses. Number 12. Microsoft, which is all about the TikTok fire sale. Yep, President Trump's threat to shut down the Chinese-owned TikTok in America if they don't find a U.S. buyer means that Microsoft could get it for a fraction of what it's worth. That would be a huge coup for a company that doesn't have much of a social media presence other than LinkedIn, which really doesn't count. Microsoft's in a fabulous position here. No other company can compete with them, save maybe Verizon. And I doubt Verizon wants to double down on its ailing media platform, think Yahoo and AOL, even though they should. Honestly, anyone who can afford it should be going after TikTok. Believe me, I would if I could put together a consortium. But I bet it goes to Microsoft because it isn't under federal scrutiny like Alphabet, Apple, Amazon, or Facebook. Now, I think there are real security issues here with the PRC. I really do. Right now, the White House seems to favor Microsoft's lowball bid. I don't know. 13, Nvidia. It's more of a rebound play. On Friday, we heard rumors that they might pay billions of dollars for ARM Holdings, a semiconductor design company with a ton of Apple exposure. Here's what I'll say about this deal. I have so much confidence in NVIDIA's visionary CEO, Jensen Huang, I call him Leonardo da Vinci, that I'm good either way. If he buys ARM, it's clearly the right move. If he decides not to buy ARM, same thing. He's more than earned the benefit of our doubt. Plus, NVIDIA is a huge beneficiary of the stay-at-home economy thanks to their data center and gaming exposure. They are in the sweet spot, which is why that stock's been so hot. How about the 14th? Beyond Meat. This was already in Costco, which reports monthly numbers on Wednesday, but their plant-based burgers were just picked up by BJ's and Sam's Club, which is owned by Walmart. These are huge outlets. Beyond Meat's keeping prices low because CEO Ethan Brown recognizes this is the moment to take market share from beef. And he thinks that will happen if you get more people to buy the product. If you can make it cheaper than real meat, that's a gigantic win. Hey, by the way, there's also a pandemic connection here as meatpacking plants keep turning into COVID hotspots, making Beyond Meat more attractive. It's for plants. Slaughterless pants, it doesn't have that. Slaughterless pants. It doesn't have that same kind of, the cows thing. This is all about a major increase in distribution. Finally, 15, how can you have a list about COVID-19 top performers without Salesforce? What can I say? The cloud's on fire. Companies are digitizing all over the place because they have no choice, which means more work for Salesforce. Plus, their Work.com platform is the single best way to figure out how to reopen your business safely, not stupidly like so many do. I wish more people would use it. Put it all together, and all the stocks that work today do better with the pandemic than without it. They aren't mall-based retailers. They aren't automakers. They aren't banks. They aren't smokestack industrials or even drug companies. They're enterprises that have huge demand because the virus has fundamentally changed the way we do business in this country. The bottom line, stop saying the market makes no sense. It's trillions of dollars worth of worth here. When the pandemic's out of control, you better believe the Cramer Covid-19 Index will lead us higher. And yes, these companies are absolutely big enough to drag the averages with them. And amazingly, go much higher still.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.